Hey, good morning, guys. Welcome to Market Mondays. So I'm going to give you guys a quick update on everything that's happened last week. It's a big update. Before I get right into it, I'm going to do a quick dad joke. Dad joke today is, what does an Iraqi dictator drive? What does an Iraqi dictator drive? A Saddam Hussein. Get it? Pew pew. All right. So getting right into it, last week we got some really big job market data that really pushed rates into a much, much better place. Pretty much since Wednesday, rates got improved upon the other, basically all the way through Friday when we get the unemployment rate. So essentially, just to give you guys in a nutshell, our labor market's finally showing on the reports that it's getting a lot weaker. So our jobless claims are still record high at 1.9. About 1.94 million, which is a lot of people not getting jobs. The initial job, or sorry, the continuing jobless claims. The next thing is that job growth is down by a lot, and then job openings dropped by about 300, 400,000 openings. So it's still high, 7.4 to 7.18 million, but it dropped about 3 to 400,000 job openings. The other thing is that the unemployment rate that came out on Friday went from 4.2 to 4.3%. So kind of showing you guys on that chart right now that we're finally seeing that everything's coming together, because usually the first few reports before the unemployment rate comes out, for at least the last 6, 8 months, has been showing that the job market was weakening, except for the unemployment rate, which is kind of all over the place. So we saw back in June, the report in probably May to June, that the unemployment rate actually went down. Well, we still had plenty of evidence that the employment rate should have gone up. Now, since June, the unemployment rate has reached its heights of 4.3%, right? A lot of the Fed members didn't think it would go past 4.2. And then they revised their decision and felt like it was going to hit up 4.3 to 4.4, which is pretty high. So with all the news coming out Wednesday, Thursday, Friday, rates got better and better and better throughout that entire week, making the biggest push for rates to improve on Friday. So we're looking really good for rates right now. I locked almost pretty much my entire pipeline of like 10, 11 locks. We're actually on the 12-month low since last September. So if you look, maybe you can argue last August, but it was kind of a small blip. But basically, when rates were back down in the end of August and into September, we're back. We're basically back 12 months later in the same spot. So the blue line's conventional. The orange line is government rates, FHA, VA, USDA. So we are on a 12-month low. This is pretty exciting because we're seeing rates trend in the right direction for the right reasons. That's in addition to that. So now that the unemployment rate is now showing, thanks to the introduction of the new BLS president or the CEO, we're now seeing the data that makes the most sense, especially for the last two reports that unemployment rate is going up. The next big updates is probably this basically Tuesday through Thursday. So Tuesday, there's going to be a big BLS jobs revision. So if they revise that, in addition to showing more job weakness, we might see another push for rates to get better on Tuesday. But by Wednesday and Thursday, we're not seeing a lot of expectations that inflation is going to improve a whole lot, if any at all. So we're no longer really relying on any inflation reports anymore to show that rates are going to improve, just because it's how it's calculated. So from now on, it's really just the jobs report and the labor market that's going to help push rates lower and lower as it goes up and up. So, but yeah, rates moved a lot, guys, and I locked pretty much my entire pipeline on Friday, saving clients either at least 1/4%, some are 0.5%, depending on when we disclosed, and then locked a few of them, which saved them almost a few $1,000s, even on the rate as well, and even on their closing costs. So I'd say up until Tuesday is probably a good time to lock. We saw some small improvements today. We might see some big improvements tomorrow, but as of for the rest of the week, I don't expect a whole lot of improvements on Wednesday and Thursday. And through the rest of the week. So otherwise, that's really all I got for you guys today. Hopefully you guys got some information out of this. But rates are improving in the right direction. We can expect the jobs data, which is usually the first week of every month, to help further push rates in the right direction. So and kind of go back in addition to that, Fannie Mae put out a prediction maybe 6 or 7 months ago about where they thought rates are going to be at the end of the year. we're actually right about there with their prediction. They were expecting rates to get down to low sixes, high fives, and we're there. We're basically there. So if we can maintain at least where we are right now, we'll be within in line of Fannie Mae predictions. However, and next year, they're expecting rates to get about quarter to half a percent lower from where we're at right now. So we'll see how the jobs market goes, but this is a really good sign because now the data is actually showing what's consistent with what's currently in the market, and now rates are moving in the direction that we're wanting them to move. So otherwise, again, that's all I got for you guys. Hope you guys have a great week. Otherwise, nuke out.